Hi everyone, welcome to today's video. So let me start today's video by telling a very interesting anecdote that many of you might be able to relate with. So I recently learned by speaking with someone who was living in Bangalore, and that person recently shifted to Bangalore. So he told me that, Akshat, you know what, I have recently shifted to Bangalore. I was looking for a place to rent. And when I went, I finalized everything. The house owner told me that you will have to pay approximately 12 months of deposit in order to take this house. It blew my mind because in Delhi, if you're renting a place, you usually have to put up 2, maximum 3 months of security deposit. That is it. But in Bangalore, this is between like 6 to 12 months. This is crazy stuff. So this led me to think about that, hey, what are ways in which you can put up your existing money to make more money? For example, in case of Bangalore's greedy landowner's case, he put up his money, purchased that piece of property, and now he's charging like 12 months of rent from people in advance and making a lot of money on it. So this is a great make money from money case. So I thought that I will shoot a video where I will explain you all the core concepts, options that currently exist in the market, where if you have money, how you can utilize that money to make more money. So that is what the video will be dedicated on, and I will explain my top 3 options towards the end of the video and which 3 options I will be using going forward in order to make money from the money that I have. But before I jump into the core of the video and start explaining you the options, let me cover a very quick concept here, which is that please understand the spectrum. There are multiple ways in which you can make money from money. Some would be capital light option. For example, if you start a digital business, that's a capital light option because you're not spending insane amount of money here to create an additional revenue stream. On the flip side, there will be capital intensive options. For example, if you have a lot of black cash lying around, you go set up a factory. That factory requires a lot of capital investment. So therefore, that is a capital intensive option. So you could possibly execute that if you have a lot of black money. And there will be a range of options on this particular spectrum. So please keep this concept in mind and let us start our discussion. So option number 1 is real estate. And this is probably everyone's favorite option and very easy to understand also. And here it can be further subdivided into 2 specific categories. You can be a buyer of a real estate. For example, you go buy a house, then you rent that house, or you go buy a villa, you rent that villa, or you go buy a commercial property, you rent that commercial property. So in such a situation, you are a buyer of that particular property. Second option is that you could be a seller of real estate. For example, if you become a real estate developer, then essentially you are a seller of real estate. So let me now break it down that how much expected profits or money you could potentially make by being in these 2 different buckets. So let us first discuss about the buyer option, that if you are buying real estate, then what is the typical return that you will make in India? This particular chart will help you understand the story well. If you are simply buying a residential real estate, then in majority of the cases, your inherent return will be between 2 to 3%. So that is the rate at which the property is getting appreciated. That you purchased a 2 crore property, every year it is just appreciating by 2 to 3%. So that is the property appreciation. You will also make rental yield, which is again not more than 2 to 3% of the entire property value. So in total, if you are a buyer of property, you are unlikely to make more than 5 to 6% returns in the current scenario. Is it my opinion? The answer is no. I have provided you with the data, and think about it from a rental yield perspective also, and just go ask in your locality. For example, I live in Delhi, and on a 1 crore property, the roughly rent is roughly 20,000 rupees per month. So in a year, how much my landlord might be making? So 20,000 multiplied by 12. So that gives me 2.4 lakhs. So what is the rental yield? The rental yield becomes 2.4%. So it's very easy to compute this rental yield scenario, and the data or the graph that I just showed you, it showed you the underlying appreciation of the property, usually being between 2 to 3% under the current circumstances. Why is that the case? I have made a separate video altogether. You can go and watch it. I have made another video on commercial real estate buying. You can go and watch that also. Then you can decide if you want to be a buyer of a real estate. And again, please take this discussion from a learning perspective. Please do not take it personally. This is not an attack on people who are buying real estate. It's a great option. Please go and do it. No problem there. And also, I'm not talking about exceptional circumstances and scenarios. For example, my Chachaji used to live in Gurgaon. He purchased like real estate and he sold that real estate, and now he's richer than Musk, and now he's going to buy like 20% of Twitter. Elon Musk could only buy 10%. So please don't engage in that discussion, and let me speak about option 2 here. That if you are a seller of real estate, this is where you make crazy money. Now here is the financial number of Lodha Group, which is one of the biggest developers in India. I will not say much because I'll get sued by them. They sue a lot of people. So I'm not going to say much about the quality of their construction. You can Google Lodha Group and take a look at projects that some people are saying. Now back to this balance sheet, what you will find is a crazy amount of money that these people are making. Now you will say, Akshat, these guys are making like 48,000 lakh crore of profits every year. This is crazy number, and they are reinvesting it and developing more and more properties, all good stuff. How does that apply to me? I'm a common retail investor. It applies to you a lot because you can at least apply the concept. The concept that big developers follow is this. They acquire land, then they build something, and then they sell those units. This is what the operational viewpoint is. Is it very easy for normal retail investors like us to do? The answer is no. It is not easy. It is highly complicated, but can we do it? Yes. And especially if you're considering building a career as a real estate developer in it, then you need to figure out ways to acquire land at lower prices, scout for very good properties, build it at a low cost. I don't know how you would do it, but basically people do it by putting on like really raddi mal in the property and then sell it. Find like bakras, sell them. They'll be making like 5 to 6% and you will be making like 30-40% profit also sometimes. So this is a great game. Instead of buying entirely completed properties, if you can go purchase kacha land simply means that a property has not been constructed on it. You can buy that, you can construct things on your own and you can sell it. You will be making crazy amount of money. So that is one great option of making money from money. You don't need to do it at scale. Even if you can do 2-3 times in your life, you will be set. Is it capital intensive? The answer is yes. Is it difficult to do? The answer is yes. Is there a lot of jhanjat with it? The answer is yes. But are there profits to be made? Yes, if you are a seller of real estate, not a buyer of real estate. If you are trying to sell an already bumped up real estate, for example, if a builder comes to you, that's a very good project is coming, please buy it from me at like 2.5 crores. You go and buy at 2.5 crores. Then you will try to find the next bakra who will go and buy that real estate from you at 3 crores. You will have a very hard time doing it. An easier option that I'm trying to tell you to make crazy money is this. Do what big developers are doing. Now you might ask me that, Akshat, why is it that you don't do this stuff? Because I don't have time to do this stuff. This is extremely time oriented. So therefore I would not have the time to do it. And I am a white money person. The entire earnings that I have, it's in complete white money. I do not even have 1 rupee of black money. So therefore this game does not make a lot of sense to me. But yes, if you are a black money worshipper, this is a great option for you. Go and execute. You will make crazy amount of money. This brings us to option 2 because many of you might say that, Akshat, like you, we are also white money worshippers, not black money worshippers. So what is it that we can do? So you should look at market instruments. So these are very easy to trade, very easy to invest, and there are a bunch of options for you. For example, if you go and invest your idle money in bonds, you can expect to make between 6 to 12% returns easily, or rather 5 to 12% returns easily, because if you're going and doing a fixed deposit in a bank, right now the rates are somewhere around 5.5, 6%. So that is the simplest bond instrument in which you can invest. Similarly, there are other bond instruments in which you can invest where you can make even up to 12 to 15% returns. So these are some of your possible options that you can execute. But a typical range on bond is between 6 to 12%. Very easy to invest also. There are no operational challenges. Same goes for stocks. If you're good at stock picking, you will make a lot of money. Otherwise, this number can actually become negative. So if you're a sensible stock picker, then you can easily make 15% for sure. And here is an entire video that I have done on that topic. Why is it that you can easily make 15% in the stock market? Third is mutual funds. Now, mutual funds by design give you somewhere between 8 to 12%. They give you slightly higher than FD rates and they give you lower than index fund instruments. So index funds would be Nifty 50, Sensex, etc. Very quick clarification there. This is what majority of the mutual funds do. So please don't quote me that, hey, I bought like XYZ funds mutual fund and I'm sitting at a profit of 50% CAGR per year. I don't know if that happens or not, but for majority of the mutual funds, that does not happen. Majority of the mutual funds by design give you 8 to 12% returns. Now comes cryptos. So cryptos in the past, especially the good ones, have given an average CAGR between 20 to 50%. Again, not a push from my side to go and invest in cryptos, because as you move across each of these asset classes, the risk is also proportionally higher. So from that particular perspective, crypto is the riskiest asset class, but yes, this is the expected return that you can make. Now, another amazing thing about crypto is that there is something called as crypto staking or crypto pooling, right? So if you do that, you will be able to make up to even 108% APY or annual yield on it. A few days back, I shot a video on USDT or stable coins, where if you just simply do a fixed deposit, you can get 12.68% APY. Similarly, there is a company in which I have invested. It's called as Totality Corp. You can check the links in the description box. They had launched an NFT called as Lakshmi NFT, and Lakshmi NFT NFT holders again made a much higher APY. It depended on the NFT that you are buying. They are also coming up with another NFT called as Trimurti NFT, which will be launched soon. In case there is enough interest, I will make a separate video on how you can do NFT staking to earn very high rewards. So let me know in the comment box if you would want me to make that video. I will shoot that video and show you the entire process. But the bottom line here is that this staking and pooling thing, it simply means what? So without convoluting this discussion for you, staking and pooling simply means that you have some NFT. So let's call it Lakshmi NFT. You go and you simply block this particular Lakshmi NFT on the project with the viewpoint that, okay, I'm not going to withdraw this, sell this and do anything with this. And you have my commitment that I will stay put with Lakshmi NFT for X number of months. And in return, the company will give you certain rewards. This is a classic mechanism how several of the NFTs work. For example, if you take a look at Axie Infinity, if you take a look at Decentraland, if you take a look at Totality Corp, this is how the NFT market is designed. That you can stake your NFTs or you can stake your crypto coins on certain projects, on certain liquidity pools, and you will get a certain APY of up to 108% also. Is this an option that you should definitely execute? It really depends on your knowledge. There are people who are doing it, making crazy amount of money through it. This is a sunrise industry. So if you learn about it, there are massive money making opportunities here. So think about it from that particular viewpoint. Many people, whenever I make such videos, I get the comment that Akshat, you are forcing people to adopt dark currencies. You are like Lord Voldemort's son and whatnot. So that becomes like a funny discussion from that viewpoint. I'm just simply trying to tell you whatever available new age instruments are there. If you keep on thinking that, everything is toxic, you will not learn about anything. So study it. If it makes sense, go and invest a little bit of money, see the rewards. If it makes sense, then continue doing it. If you do not understand, please do not invest. It is as simple as that, because there are a bunch of other options as well that you can execute. So I hope this point is clear. Now comes the third money making option where you can make money from money, and this is called as launching digital products. Now, to build digital products, you don't need insane amount of money. For example, I recently launched a management consulting course. Again, you can check the links in the description box. To make that course, it did not require a lot of money from my side. It is just basic camera. I'm shooting it on camera and will release it as a course. I'll be joined by my friend from McKinsey and I'm not paying him anything. So I'm literally asking him to teach for free. So essentially my expenses in terms of launching that course is zero. But if you think about it, I had worked in consulting for a very long time. So I learned a ton of stuff. I went to INSEAD. I prepared for management consulting cases. I taught management consulting at several business schools. So bottom line is that I had to invest a lot of my intellectual power in terms of learning about that industry. Now I'm packaging that in a form of a course. So yes, theoretically, I did not have to undertake a lot of expenses per se, but I had to invest a lot of my time in terms of learning about that industry, then creating the course, structuring it, adding value to it, etc., etc. Now, what is the profit margin that one could easily make? It really depends on how much distribution you have. For example, many big influencers who are launching their courses, they run a lot of their ads. I do not run any of my ads. So my profit margin will be much higher compared to someone else's who is doing YouTube ads or a bunch of other different ads. So it really comes down to that cost structure. But a very important point to understand here is that, see, there is no barrier to entry in terms of creating these digital ebooks, in terms of creating courses, in terms of launching new digital products. But distribution and marketing become a very expensive affair. If you do not have any distribution, any presence, if people do not know you, then it becomes really difficult for you to sell units of your courses or any digital product that you're launching. I'm not trying to dissuade you. It is definitely a great option to make money. And this money makes money theory can be applied in this way when it comes to digital courses. So if you have a lot of money lying around, you create a digital course, but you don't have any distribution marketing power, then you can pick up that money and you can start marketing it and see the results. If it is giving you decent results, then continue doing it. If it doesn't give you good results, then just stop with it, because the entire cost structure might not make sense for you in terms of running that digital course or digital books. Now, the final point here is that who should be launching these digital courses? So a few quick points to remember would be that number one, if you have expertise in a particular field and you can display that expertise very, very clearly, you should go and launch that course or write an ebook. Second, if there is big enough use case for your course, for example, if you launch a course on some random foreign language that, hey, learn this new foreign language for me, probably you will have a very hard time finding users for that course. But if you talk something around business, if you talk something about finance, for example, these are categories in which I'm quite active. Not because there are great money making opportunities, but because this is how my career transpired, that I have been working in finance/consulting for almost 1.5 decades now. So please understand that which categories would be valuable versus not. And also please understand that your course should have some kind of USP or unique selling point. For example, the course on management consulting that I have launched, what is the USP of that course? The USP of that course is fairly simple, that I myself went to INSEAD. I worked with the top social impact consulting firm in India. My friend Lewis, he's from ex-McKinsey. So you are getting to study business strategies directly from management consultants at a very low price point. Our rival products, they sell these courses at $1,500, $2,000, this, that. We are trying to do it at a fraction of a cost. But yes, a simple piece of advice is that please don't just simply cut down the prices, also look at the quality. Because if you can maintain quality, only then you will be able to maintain a growth trajectory. Now comes the fourth option, which is a high capital intensive option. Now here you have to figure out what type of high capital intensive option might make sense for you. But let me help you understand what high capital intensive options are. For example, check Reliance Jio. It's a classic case of high capital intensive business. For example, when Jio started out, it literally monopolized the market. How? By spending crazy amount of money. It was not generating free cash flow. This can be seen from the financial numbers that it was a consistent loss-making company for years. So you and I cannot run such businesses, and there are certain businesses which will have very high capital expenditure and investment requirements. So you will say that, okay, what are these type of businesses where initially my expense will be very high, but I can make more money subsequently. So franchise business might be one such case. So I was looking at some of the franchises that you could consider mine. For example, if you buy Domino's or Subway franchises, the usual expenses can lie between 20 lakh to 50 lakh. But majority of these franchises are profitable. Now, I do not know enough about it because I do not have first-hand experience in this of running a franchise. So please go do further due diligence. But I'm just trying to tell you options as to how you can use your existing money to buy a franchise and then turn it profitable and make money from it. So that can generate to this making money effect. Another additional point would be that you could consider building your own brand. For example, you would have seen Chayos or MBA Chaiwala, etc. They have built their own brand. That was not a franchise business. But when they started out, they had to rent a shop, make their product stand out, then expand from there to different cities, start renting out more units, etc., etc. And that is how organic expansion undertook. So important point to note about these brand building exercises when it comes to capital intensive industries is that you must remember a very simple point that number one, please do not take too much debt because that can really destroy you. And these businesses can eat a lot of capital. So be very, very mindful. Second, exhibit some kind of organic growth. Don't try to grow too quickly because that can be detrimental to your financial well-being. So as long as you are making money from one of your franchises, then try to expand to 2, then try to expand for 3, but don't go and buy like 5 franchises together and pour all your money and take like massive amount of loss. Now comes the fifth option, which is a moderate capital intensive option. And there are a bunch of options here. I will talk about one specific area, otherwise the video will become really lengthy. So moderate capital requirement option means that you are investing a few lakhs to make money and then you make money from that particular unit. A great option right now is crypto mining. And how much investment does it require? It requires significant amount of expense in terms of buying these type of machines. So take a look. These are the type of machines that you will need to buy and they allow you to mine crypto. But people often ask me that, Akshat, if I buy this machine, can I become like crorepati after 10 months? The answer probably is no, because it's not just about buying a machine. It's also about what cost you are getting the electricity at. In India, the cost of electricity is very, very high. Therefore, the crypto mining business in India has not exploded. But keep a track. If there is some support from the government, subsequently speaking, after 4, 5, 10 years, maybe this might become a great industry to learn about. Second, take a look at the development of metaverses across the globe. Metaverse building is a big thing as of now because a lot of big companies, be it Nike, be it JP Morgan Chase, they are all building their empires in the metaverses also. So they are connecting physical and digital world. Now, when people have to interact both with this physical and digital world, almost 60, 70, 80% Janta will not be good at it. They will struggle with tech part of it. They will struggle with the usage part of it. They will struggle on a lot of fronts. This presents a great opportunity for you to learn more about metaverses. It's a sunrise industry. Build a little bit of infrastructure by spending money. For example, you can build something like a metaverse call center or something, and you can start providing support to people. If you do that, you might have a great business at hand because you are riding a certain wave and a certain trend. And whenever you are riding a trend, you can make a crazy amount of money. So this brings us to the final section, that what are my top 3 options where I might be experimenting in the future, or I am already experimenting. Number 1, capital markets. I invest in a range of different instruments. For example, cryptos, NFTs, stocks. So this would be my number 1 option. Why? Because almost all my money is white money, and it becomes easy for me to execute these options, and even the returns are very good. Second is the crypto and NFT staking. I do yield farming as well, which gives me good returns. It becomes very difficult for me to teach that on YouTube because the duration of the video needs to be shorter, but learn more about this space. You can make a lot of money. Third is that I am planning on launching my own coffee brand. Why? Because it's just fun for me. I would love to do it. I've always been fascinated by good coffee. So that is one probable area that I might experiment in the future. So let me know if you enjoyed this video, and I will see you tomorrow.